Okay, good morning, everyone, and welcome to what is now the 55th edition of the Coffee Microcaps Morning Meeting. My name is Mark Tobin, the founder of Coffee Microcaps. For anybody who's joining us for the first time this morning, I'm just going to quickly run through some intro slides, and then we're going to get straight into it with our first presenter. Firstly, I'd like to acknowledge our virtual event sponsors, Merriweather Capital, Luke Winchester, who some of you may know from Twitter. His new fund just launched on Monday. So if you're looking for a new microcap fund manager, be sure to check out Luke's offering in his PDS. Quick compliance and disclaimer slide. For anybody who is joining us for the first time, the companies we generally have on here every week are capped under 300 million in revenue and approaching cash flow break even, or indeed are already profitable from outside the resources and biotech sectors. So what I like to call industrial microcaps, which can encompass basically all the other sectors. So microcap financial services, microcap technology companies, microcap retailers, anything outside of those resources and biotech sectors. Structure the webinar. We're going to be going for the next hour. We've got two companies presenting 30 minutes each, where they'll have a 20-minute presentation, and then we'll throw it open to Q&A for the last 10 minutes. If you do have any questions, please type them in the Q&A box rather than the chat function. Just makes it easier for me to moderate the questions to our presenters. And please note the webinar is being recorded, and it will be posted on the Coffee Microcaps YouTube channel tomorrow morning. Just in case anybody can't join us for the full hour, you can catch up after that. You can follow Coffee Microcaps. Twitter is probably the best place to get us. As I said, YouTube for the recording of this webinar, and indeed all the other webinars in this series. LinkedIn also, and I also write a weekly paid subscription newsletter where I profile one interesting ASX microcap every week, and you can grab that on the Substack newsletter platform. Up first, standing by, we have Scott Farthing from EVZ Limited. After that, we are going across the Nullarbor to Perth, and be delighted to welcome back Rob Graham, who's coming back to give us an update on Schrole Group. And without further ado, I'm going to hand over to Scott. So Scott, I'm going to stop sharing my screen. And if you want to start sharing yours.
Thank you, Mark. I'll do that.
It's coming up. Yeah, there you go. Perfect.
Good. Well, thank you. Thank you, Mark. Thank you for the introduction. Good morning. As Mark said, my name is Scott Farthing, and I'm here to present you EVZ Limited. So EVZ is a diversified and small engineering business operating in the industrial, energy and building product sectors. The EVZ business has three subsidiaries: Brockman Engineering in the industrial construction sector, Syfon Systems in the building product sector, and TSF Power in the energy sector. Our businesses are distributed across Australia and Southeast Asia, serving growth markets in their respective region. Head office, where I am today, excuse me, is in Melbourne. You can see there on the screen the distributed locations of our offices and our resident people, and about 300 people across our network, and our major shareholders are Thorney Investment Group, Salter Brothers, and the board and management have about 16% spread amongst us. I'll take you a little way through each of our businesses to get a bit more background. Brockman Engineering, it's a bulk storage tank contractor to the water, mining, chemical, agriculture, and fuel sectors. Brockman also provides pipework and other fabricated items in addition to mechanical contract maintenance and project services to the industrial, fuel, and mining services clients. Boiled down, we're a mechanical contractor with a specialist niche in tanks, fuel industry, mining industry, and chemical industry services. They're located in Geelong. Brockman operates nationwide, providing a safe outcome for complex turnkey projects to major industrial companies such as Viva Energy, who are our neighbour, Mobil, Ampol, Intertech Pivot, Melbourne Water, Sydney Water, Yarra Valley Water, CBH, New Farm, and the list goes on from there. Brockman currently employs about 120 staff, and this flexes from about a low of around about 100 up to 200 or 250, depending on project workload. It has a headquarters and a fabrication workshop, which supports our project work and also supports our businesses, our client businesses in Geelong. We have site-based maintenance teams, permanent site-located staff, and site constructors who head out to the projects as needs and as the projects cycle in and out of our business. One of our sectors is moving into a boom phase. It's the fuel sector. There's currently an upcoming increase in design and construct for fuel and fuel tank project work due to the need for Australia to increase the volume of onshore diesel fuel storage to manage its sovereign risk in the event of a world oil shock. Over the past 15 years, Australia's oil reserves onshore have been depleting due to increased demand and closure of facilities. The government has taken an approach, after much consideration with industry, to expand the amount of diesel storage held on Australian soil by 40%, or 780 megalitres. This will bring a minimum 50% increase in workload in Brockman's industry over the next 3 years. Depending on the amount of associated works, this could range up to 90% of increase in work for the next 3 years. All projects have to be complete or in their final completing stages by June 2024. The government is supporting this program through grant funding, and I'll take you further through that in a moment. We continue to have growth opportunities in the mining sector as the mining sector continues to develop and grow its asset base and permanentise some of the new mines, and in the water industry, where the continued growth of Australia's population and urbanisation, particularly in the COVID period, where people are moving to regional areas, need better water resource infrastructure. Following those major investment cycles, there's normally a period of maintenance and sustaining capital that flows from the additional assets, of which Brockman is exposed to that market also. Moving to Syfon Systems, it's the leader in siphonic stormwater drainage in Australia and Southeast Asia, holding more than 75% market share. They provide siphonic stormwater systems to major projects as well as many minor projects, but fundamentally large projects benefit most from a siphonic stormwater system. It's a technology efficient, or a siphonic stormwater drainage technology efficient method of managing the collection and drainage of stormwater in large buildings such as the one shown on the screen now. It's the Melbourne Park Tennis Centre. It is used almost exclusively on iconic buildings due to its assurance and efficient and effective stormwater drainage with low risk, extremely low risk of a fault or overflow. Some of our clients only use siphonic stormwater drainage no matter where they are in the world, because they have a guaranteed performance and no chance of a stormwater ingress, which is common in places in Southeast Asia where the standards of installation are poor. It can be poor for conventional systems. There are several benefits to choosing a siphonic stormwater drainage system, including smaller bore drainage piping, less floor space consumed for downpipes, and flexibility to reduce the expense and complexity of underground civil drainage. And they're more easily able to meet the unusual architectural roof shapes that we see in modern buildings. We're currently doing the the Sydney fish markets, and if you've seen that site and the architectural images of what's going to be on that site, you'll know that roof and many of the other roofs on things like stadiums are very complex, and siphonic is absolutely ideally suited to developing solutions for stormwater management in such places. It's mostly and more commonly used in areas that are urbanised where they require stormwater detention. That is, where the stormwater is stored on site for either reuse or a slower release to the in-ground mains from the council or the city. because we have more flexibility using Syfon to the point of discharge, whereas conventional systems struggle with sometimes falls, pipe routing, and others because of the size of the pipes and the requirement to have a fall on every pipe, whereas Syfonic can run flat pipes. And if you, to just give you a moment of how this system works, if you remember when you're a kid, if you had a fish tank and you put the clear tube in to drain the fish tank, you would immerse the fish tank in, the tube in the fish tank, put your finger over the end, pull it out, pull it down lower than the fish tank, and the fish tank would drain. So that's fundamentally the form of Syfonic roof drainage. It allows the system to fill, the system droppers then fill up with water. The weight of the water in those droppers or drainage pipes hoovers or sucks the water off the roof in a surge manner. And when it's finished clearing the roof of water, the system then allows it goes through that cycle again. It goes through the Syfonic cycle again. It's been growing in the world for the last 25 years. We, EVZ, acquired Syfon in, I think, 2004. And we've grown the business by tenfold in that time. And it continues to grow. And one of the regional interest for Syfon is being in areas of the world where the rainfall intensity is high, such as Southeast Asia and other areas of the world. So our business really covers Australia and Southeast Asia, and we're the dominant player in that place, in those markets. In the next periods of time and the growth opportunities we see big markets that we can open up in Indonesia. We have some communication underway now. We've been having this communication for 2 or 3 years with a particular partner, and that looks like it might be able to get underway in the next 12 months. Thailand, where I have some history from my working environment and have a lot of contacts, and the Philippines, where we've done many projects in the past. Our headquarters in Asia is in Malaysia, in Kuala Lumpur, and we have more than 100 staff, technicians, engineers, designers, and the like that we use right across Asia from our domestic position there. We see that Syfon is an opportunity for growth, including franchising opportunities across Asia and across other regions with high rainfall intensities across the world. TSF Power, excuse me for a moment, dry. Thank you. TSF Power is a leading provider of technical operations and maintenance services to the distributed power sector. TSF specialises in emergency power backup generators and is a market leader in supporting renewable gas generation industry in Australia and New Zealand. TSF Power also provides technical support and sales new and replacement parts for engines, operating engines, and supporting our clients, keeping their machinery running. The waste gas energy sector, which is the growth area of TSF Power, is a specific focus opportunity, and it relies on our clients' businesses which capture waste gas from biogas sources such as landfills, agricultural and water treatment plants, and converting that into electricity for sale either to the grid, to another customer directly, or for use behind the meter, that is for use in your own assets. So a water treatment plant might take the biogas or might use that gas to convert it to electricity through use of this machinery, and that energy, that electricity, might well be used in running the plant to reduce the client's own energy bills. The engines are a specific design. The parts are very expensive relative to the overall operating environment, financials, economy, and the benefits to the client through power saving and also using a renewable energy source, renewable gas source, are significant in getting LGCs or RECs, or however your term you call, or their the green beneficial contribution schemes. Okay, so there are 3 businesses. You can see there on the screen the percentage of revenue in our group from each of those businesses and the style of revenue Two of our businesses have significant recurring revenue, being Brockman and TSF Engineering, and Syfon is particularly a project revenue source business, but has a very good diversified book of work and a track record of growth and maintaining that position. Being 75% market share, we lead the technology in the industry. We also lead the innovation in that space in Australia and Southeast Asia. Okay, so FY21 shows a quick analysis of the results for FY21. 21 was and in some part FY20 was also impacted a little by COVID, but the last 2 years have had some COVID impact. And you can see there last year there was a reduction in revenue, but we've used very tight and strong management control of the business, strong lead of our clients and project teams to derive a profit from the team, from the business, and use that profit to reduce our term debt, which is now down to 1.2 million as at today's date, 1.45 million at the balance date for the financial year. You see the distribution of EBITDA. In fact, the COVID period, or the impact of COVID on our business during FY21 amounted to fundamental, either clients either not being able to provide us their site for use because of local government shutdowns or statewide shutdowns, construction shutdowns, economic reasons because they're managing their cash flow or conserving their cash flow, or health reasons because we might be exposed to their staff or others. So it was a pretty reasonable proportional impact on each of our businesses at different times of the year. And I think for those who are in business in many forms over the last 2 years, you've learned a lot about how your teams work and under pressure and how your management teams function. I think our management team became closer together, stronger, and we learned and gained further knowledge about the flexibility and strength in our management and our delivery teams about how we were able to get through these periods. EBITDA distribution and EBITDA per region, Australia versus Asia, is shown there. It's probably, although quite proportional, I'd say that the challenge of managing through was more difficult in Southeast Asia because of the significance of the shutdowns and lockdowns that, or maybe more difficult for our teams to operate than in Australia. In Australia, we could certainly find a way around the problem, even if it was 2 or 3 weeks down the track. But we're seeing now the period, and I think everyone sees it, 90% vaccination around most parts of Australia, the bigger population centres of Australia. You're starting to see countries in the world, with the exception of Europe, but at least in our region of the world, coming out of COVID lockdowns, and we're now seeing a real regrowth in opportunity, in tenders and the like, and I'll talk a bit more about those later. Okay, so this is a project, just to give a bit of a picture tells 1,000 words. This is a project that typical project that Brockman would do, and this is a typical project in the diesel program that the government's put forward. So this is an expansion of an existing terminal. The tank's on the right in the screen there with the expansion part, and this terminal has many years of expansion to go. Every 2 or 3 years, this particular client puts 2 or 3 or 4 more tanks on their site because of their growing network of service stations and also their growing customer base or their growing wholesale customer base. So a typical project for Brockman that is pretty good for us and we enjoy is to build either 2 or 3 tanks, all of the civil works, all of the bunding, the safety bunding for in case of a spill, all of the pipe work and electrics to integrate those new tanks onto the existing ring mains and networks on the site. It's very complex work, working on a live site. So that's pretty much where the sort of thing we enjoy. So this is a little bit about the Boosting Australia's Diesel Storage Program. It's $260 million in funding, of which a maximum of 50%, so to any project. 780 megalitres of storage around Australia. to be added. And so you could imagine from 260 million, 50% of that would be 50%, 520. Most projects are getting between 30 and 40%. It's roughly $600 million worth of additional work that will go into the system over the next 2 to 3 years. This is a distribution of the projects. You can see east and west coast, mostly east coast. And the green projects there are the ones coloured green are those that we're currently bidding and will be likely decided before Christmas, or if not, shortly after Christmas, some in the next couple of weeks. And the blue ones will be bid next year. So it'll be a good 12 months of cycling through the competitive process of choosing a contractor to deliver these projects in a partially government funded way to these companies, so that the industry and the distribution networks in Australia can increase the inherent storage on our soil. This is a water project that we completed in Melbourne for the northern suburbs, water distribution in the growing northern suburbs of Melbourne. And this is a typical water project, something like the order of $5 to $10 million type water project. And we do a few of these a year for the Yarra Valley Water, Melbourne Water, Sydney Water and the like. Pretty good projects, can be relatively straightforward, but integrating into existing networks and delivering an extremely high quality project to the health standards, and the health standards in water projects are significant, with welding and no areas for any water to be trapped and the like in the system. It can be challenging depending on the location and the style of the job. Okay, so we see momentum returning to our operations, and we're feeling it every day now. Our clients are inquiring about opportunities that they'd like to, new assets they'd like to build. We're seeing more tender inquiries. We're seeing that Brockman's well positioned to secure a share of those projects I had coloured for this year, which would equate to about $100 million. We said that they're well positioned to take a good share of those. We see Syfon's tender inquiry rate, I would say, just by sampling the evidence of our teams, I'd say it's gone up 30% in the last 5 weeks. And we expect that to continue to go as projects that were on the drawing board and pushed aside during the lockdowns come back. And we're already seeing some wins in the last 2 months that I think we'd been thinking might come through in the next 12 months, but we're starting to see things starting to speed up. TSF Power is seeing a return to accessing city buildings. They're also seeing greater investment now for clients in the West, in the mining sector and the like, wanting to invest in power plants for their sites. Also, major water authorities and the like now pressing ahead with some even potentially new technology, from converting the biogas to biomethane and redistributing that in the network. So it's a pretty interesting period, and it's a nice thing for a business to feel when this is happening, because the uncertainty during COVID was challenging for many parts of the community. This is a project we secured about 4 weeks ago in Penang. It's the Light City. It's a development sector, waterfront development project. This is typical of a large project. We're doing a similar project called Tun Razak Exchange, or TRX, in Kuala Lumpur, an entire city development. These are the sorts of projects that you would get in Asia. We do these types of projects right across Asia, and for those of you in the listening to this presentation who've worked in Asia, as I have for many years, and lived there, these sorts of things just crop up and on someone's drawing board from an idea, and developers and the like, and a couple of years later, with the government support, they turn up, and it's a very busy space for 3 or 4 or 5 years to develop something like this. So we love these projects. We get involved. We manage stormwater clients, very big name blue chip clients in Asia will only use our service because of their requirement to have a safe, dry building, fundamentally. So the next couple of years, we see our strategy moving, taking the momentum that's returning from the existing operations, moving our contact base across industry as people have moved on from their job or moving into new roles. We're seeing increasing activity, and we see our skills we've been able to retain through this difficult lockdown couple of years, been retained, ready for growth, ready for new action, and we have the capabilities to move on. We see the new opportunities in the energy transition from, let's say, old style energy to new, and we're researching and discussing these opportunities with our clients every day to see where we can monetize a valuable service in those spaces. And with our strengthened balance sheets over the last couple of years as a result of paying down our term debt, we're ready to grow. So we're looking to scale up the size of the operation, looking to add significantly to the turnover base that we've got at the moment, and that'll be either done through organic growth, as we're experiencing now by winning some nice projects, but also we're well entrenched in discussing with specific industry players about potentially coming on in a partnership, an arrangement, or even a potential acquisition to grow our team and geographic access to projects. We see that there's a significant opportunity in Syfon in Southeast Asia as the markets open up. Okay, so this is a project that's halfway through in Brisbane. It's a transformation of the part of the Brisbane River there. A major project. Looks a little bit like the project we did Marina Bay Sands in Singapore by some of that design. In fact, when I saw that photo, I thought it was a different perspective of Marina Bay Sands. We did Marina Bay Sands in Singapore nearly 20 years ago. So it's this is the sort of project we get involved in, but we also do many normal warehouse type projects. You know, at any one time, Syfon would have 100 projects on the go at any one time across Australia, and probably a similar number in Asia. So you know, it's not just all about iconic projects. There's a very good domestic business there. So in the slide pack, there's also financial and safety data there, more detailed, and that can also be referenced from the ASX website through our results. These are the same charts that we provided in our chart pack just recently. You can see those. So I'm happy to take questions.
Cheers, Scott. Thanks for that. Just a question on the debt that you've been aggressively paying down. I'm just wondering, would you think about taking on debt again for an acquisition, or, you know, if you really see a ramp up in business now post COVID, with the diesel side and the Syfon side, you know, to fund working capital? Or are you really trying to get to, you know, solid cash on the balance sheet and just dip in and out of that as needed?
Yeah, I think businesses like ours are considered more highly on the markets, and also considered more highly by clients when they're debt free. Now we've had positive net cash for some years, but I think having term debt, if it's small, is probably okay. But we were in a position many years ago, last 5 or so years ago, as you can see on those charts, where the debt was a matter to be managed regularly, and it meant you missed out on project opportunities, or could miss out on project opportunities because the way companies are assessed. So I think our approach going forward, we have minimum debt. It may not be zero, but it'll be quite minimum, and maybe a facility just for large, maybe a equipment purchasing facility or something like that as we move through this next 12 months. We have a schedule between now and September next year to pay down that last $1.2 million of debt to zero, so our term debt is zero. And look, the big need for our business is performance bonding or security through either bank guarantees or insurance bonds to provide security for projects, and that's the type of liability, financial liability, that we would probably use most of going forward. So for acquisitions, we'd be looking for a structured outcome, including earn out some, maybe a small amount of stock for some acquisition owners, vendors, and equity, I think. So we'd look to potentially be offering up some opportunities to gain some equity in our business going forward, should we find the exact right acquisition target.
And then on the Syfon business, the is the technology or the designs that the engineers have kind of put together over the last 20 years or whatever, is that patented, or are people relying on kind of your kind of long track record and experience specifically in this niche of stormwater capture management and I guess prevention of damage to the assets? I'm just trying to get a sense of why people would be particularly attracted to the EVZ offering.
Okay, so it's not patented. It's a law of physics. Unable to patent, Albert Einstein would appear to have a patent on the law of physics, but it's laws of physics. But the reason why our offering is better than all others in the world is we have a unique offering where we have of the order of 35 engineers who do a unique solution for every project. And therefore we have a flexible design offering. We can solve problems in the architectural or architectural desires of the designers, and resolve very complex roof systems that can't be done by others. All other systems in the world, almost all other systems or providers in the world, use a simple software program that they've developed, or a rule of thumb or a chart to get an outcome. Our guys do unique designs, and I think why no one can get to our 75% market share in any region we take over, it does take a while to get to that level and convince the market, is that our team now is so strong and so dominant that clients just know that the outcome will be unique, it'll be of high quality, and it will have the support of the engineering and the technical space, whether it be on site or be a technical query or a change on the project during the project, such that it can be accommodated. And we have pretty much 100% dry, non-leak track record for producing really fantastic designs in numerous materials. Most other companies just use one material. We can use stainless steel, HDPE, PVC, whatever it be, whatever the client requires for his particular outcome. You know, we're working on a project in Sydney at the moment that it's a stadium project. If you live in Sydney, you'll probably know it. It's I think it was called the SFS once. It's got very unique design challenges. So ours is about our application of technology and the quality and level of expertise in that application, where, you know, to invest at that level, to get to our level of quality of solution, you would have to have our level of turnover and market share, and having 75% is the place I think you need to be able to have that sort of assurance to give your clients, and the track record of projects and the solutions we provide.
Cheers, Scott. We've gone slightly over time there, but I'd like to thank you for your presentation this morning. And if I could ask you to please just stop sharing your screen, as I know Rob is waiting in the wings over in Perth for us. Rob, if you want to start sharing your screen.
No problems. 1 second, I'll find the document.
It's just coming through now, Rob. Yeah, I can see the cover slide. Yeah, full screen mode now. Yeah, you're good to go, Rob.
Great. Thank you very much. And thank you everybody for attending this morning. My name is Rob Graham. I'm the Managing Director of Schrole Group Limited. We are an HR software as a service company aiming our services at the education market, global education market. My background is as a teacher and a principal, and I worked for more than 20 years in international schools, and came back to Australia. And before I started Schrole, ran a company managing teachers, placing teachers into international schools. That company is now one of our competitors. But after 5 years of running that franchise, I decided that I would like to try to solve the problem of finding teachers for good teachers for schools in a different way. And so in 2013, I founded Schrole. Now, Schrole as a business is a full HR, will be a full HR suite. We are getting there. Most of our modules are in market. One large one is close to being released. So we are, our initial target market has been international schools. We are now in a global scale-up phase. We're looking to expand our product, looking to expand our market share, and also looking to expand the money that each school spends with us. So currently, our business has these modules. I'll start from the left. Scroll Connect is our flagship product. We are on our third iteration of that. We're on version 3. That was released in 2013. And the aim of that software was to manage the whole recruitment process for a school, to make it easier for them to manage. We started in 2013 with 6 schools who happen to be the best schools in the world and who still are our clients. That has expanded to more than 400 schools now. And we have around about 150,000 participants on that platform, including mostly teachers. So in addition, a couple of years later, we decided, after 2013, we decided that we would launch Scroll Cover. That is an app that deals with relief teachers. That has had a very loyal following in Australia, in Western Australia. We have over 200 schools using it, but we also sell that into hospitals as well. That just manages the whole process again of when someone calls up in the morning at 6 o'clock and says they can't come in, rather than do it by phone or by text message, just does it by the app. It solves the problem and makes it 1 or 2 minutes. Scroll Verify is our background checks. We use a provider from Singapore to do that. It's actually quite complicated to do background checks for teachers. So we have an online system for candidates to order checks. We will be launching our school side of that earlier next year. Scroll Developer is our training business that has been around since 1994. Actually, it funded the growth of Scroll. That has been traditionally delivering training services into the big mining companies, Rio Tinto, BHP, FMG, but we're in the middle of pivoting that and offering short courses and diploma of leadership management into international schools and getting some traction there as well. The piece we're really excited about is our Scroll Engage. Scroll Engage is our staff onboarding. That is in UAT at the moment, so user accepted testing. We expect to have a beta version released sometime in December to some schools, with that going into market in 2022. That's basically onboarding, helping schools manage the whole process about what happens after you actually hire someone. We are really excited about that because while the recruitment market is fairly full of people who are offering placement services, we're not a recruitment company. There's just no one in the market to compete with us as a full HR suite for schools. So once we release that we feel there'll be good take up, and the schools we've showed it to, and also the schools who are interested in coming on as for trials are quite good, and again very, very good names for coming on. So very, very excited about that. So what we've done this year, last year we took some cash, and we decided earlier this year, the board decided that we would expand our sales team. We'd expand the product suite delivery, and we have done that this year. We've expanded our team. We have brought more products to market. We released Scroll Connect in July. We released Scroll events in September. We had our first event in October. We have another event tomorrow with over 1,000 teachers coming to it. We are soon to release Engage, and so we've been expanding our team to better deliver an expanded product suite. We've also expanded our sales team across so we can focus on the whole world. We're also looking to expand and diversify our sales revenue, and we think Engage will do that. Engage, really, the process for hiring is happening now, finishes in January, February, maybe March, and then Engage becomes a really important part. So we expect to start that. We'll be selling that right at the time when schools need it. So our revenue has grown quite substantially since 2018. In COVID, we still grew. It was an uncertain time for us. We did lose some schools, and we spent this year rebuilding our school numbers. So we went down to about 350 schools in the October quarter 2020. Now we're well over 400 and continue to grow. So that's been pretty exciting for us. Our quarterly cash growth has also been growing. I know the back half of the year is strong for us, so that continues to trend upwards. Just a word on chart 2. One of the questions that I've been asked is why aren't we comparing it to previous period, which is 2020. That was slightly higher in 2020, and the reason for that was we were invoicing with our partner. We were invoicing all renewals. Now we're only invoicing 50% of the renewals. This is part of our deal with ISS. As that partnership falls away, next year we'll be going back to only invoicing the schools that renew with us and new sales. So as you can see, we've had a strong growth in customer numbers. They continue to grow. We had 419 in the September quarter. We were really happy with our contract renewals of 91% in the September quarter. We have also been increasing our software margins. Now, our partnership with ISS meant that we only received, so we would invoice 100% of the revenue, but we'd only receive 50%. So that really put it, and so we used ISS as a cost of sale. So that really put a lid on our margins. And so that is, because that has fallen away or falling away, we will see software margins return to what we consider to be a true SaaS company, particularly for Schrole Connect. That is a mature product that is in the market and doesn't require a huge amount of work. Some of the other products are getting worked on, but Schrole Connect is a mature product, and we will see these margins continue to rise. Our contract renewals have been really significant in that we've got a really good account management team. Traditionally, we were not able to do account management. So from January this year, we have a team of about 6 who manage the whole relationship with schools and help them with recruitment, help them to use the software. And that has been one of the reasons why we're maintaining really high renewals, and we expect that to continue. So a little bit about our target markets. So who are they? Who are our target markets? Well, international schools are obviously our very first target market, not the only one. They're significant, 12,000 and growing. They grow at about 8% per year. We currently have just over 3% market share penetration. If we were to double the number of schools, if we added another 600 schools, we would double our revenue. We're also targeting the HR spend, which is a little bit different to recruitment spend. So HR and PD, we estimate to be at 5% of the budget. And basically that's a $3.6 billion addressable market for us for international schools. So we will be targeting that, particularly with Engage and also with Develop. Another adjacent market for us, and obviously very, very close to everybody, or most people listening into this today. The domestic markets for us are a big market. From the Australian domestic school market, we are targeting the private schools. That's about 3,000. We currently have 200 school customers. But if you think about the international domestic schools in the English-speaking world, there are 180,000 domestic schools. Now, we have a little bit of just some changes to do with our software. We ask, right now, we ask for information around marital status and date of birth. And those sort of questions are really, and also dependence, and those sort of questions are really important for international schools because they need to know how many children people are bringing, because they need to provide places for them and also need to provide housing. But for the domestic school market, that information is not required. So just a bit of, we're going to be doing some development to make that easier for schools to turn off. And we look to go into the domestic market next, or very, very soon. In terms of the adjacent markets, we're already in one of these. We're in the in the healthcare markets. We have a contract with Schrole cover with most of the public hospitals in Western Australia. We deliver that gets delivered through to their orderlies and catering staff. That's used across, as I said, most of the hospitals in WA. Getting to know a little bit about how hospitals work, and so we think there's a market for us in healthcare and also aged care. As you can see, that market's quite big. They all have the similar problems to education in terms of making sure they have the right people working in front of patients. Higher education in Australia and internationally is also an adjacent, something that we understand. Education we understand really well, and we think there's an opportunity for us to branch into that area as well. So if you'd like to get the research on this, please just email us and we can send that through to you. So what are our sales drivers? We have new products. Currently, our average contract value is around $11,000. We are looking to increase that to $30,000. So how are we going to do that? We do that currently by selling Connect and Cover and professional development services. So we've just released short courses. We had our first pilot of that last week, where we had 15 participants from around the world take part in one of our short courses. We're looking to expand that and do that on a regular basis, bring more providers in to sell short courses as well. We see that Engage will increase the contract value. The example that we've talked about before is ISHMIC, International School of Ho Chi Minh City. They bought 4 developed courses from us. Each developed course is for 8 people, and it's worth about $25,000 US. So their total contract value was up to 154. That actually has gone even higher because they've utilized us for other services since. But that's an example of where we can overachieve and go beyond $30,000. But we're looking to provide a range of services and get our contract value up to $30,000. The piece we're most excited about is probably this sales driver number 2. We have a really good sales and account management team, 9, who are working on both sales to new customers and upselling to our current customers. Upselling is a lot easier to do when people trust you and know how to use the system. So we've got a lot of people who currently working with our schools who are looking to sell other products into that area. Currently, we're focusing on events. Events is a really great opportunity for us, for schools and candidates to engage with the system and engage with us. Just a word on events. Events is a module we released that connects into an events platform and enables schools to have face-to-face conversations with teachers, but also do live chat and do presentations. And also, when they see a candidate they can actually click on their name within that app and open up their file within Schrole Connect. But it's fairly seamless. It is the best example of event software that is in the international market. People haven't spent a lot of time on developing the product. They often operate independent of each other. Our product operates within our system. So that took a bit of work, and we're really excited about that. And our feedback has been outstanding. So our online sales focus, obviously we can't travel. In Western Australia, we're locked in. Maybe that will change next year, but all our sales are online. We do sales through customer referrals, referrals through our website. We have been marketing through conferences, but obviously that's not something that we've been able to do recently. So we do a lot of reach out to schools. And what we're finding this year is that the recruitment market has gone a little bit wild. It's probably, everyone talks about this great resignation. I think what's happened in places like China, teachers have been locked into China, not able to travel outside of the country for 2 years. And they're looking to not be in such restrictive places. So there's a lot of movement of teachers. A lot of jobs have been advertised. There's a lot of engagement on our platform. We had a 1 week that before our last event, we had 50,000 unique visitors to our website, which was 300% higher than any other time in our history. So we're seeing a lot of people using our platform. We're seeing a lot more jobs being advertised. We're looking to expand our target market. Currently, we are really strong in Asia and the Middle East. We are also looking to expand into Africa and into Europe and also the Americas. And so we've got people who are working directly on that. So a word on Faria. What we are doing right now with them is we are doing an integration into their dashboard. They have a services manager dashboard where they have all their products. We have got a tile, have that tile working at the moment. We are just waiting for Faria there's some things for Faria to do. We have to go through an acceptance process with them. We're looking to have that released this month, hopefully. We are in the final stages of having that, and then we can start marketing. Obviously, Faria is a big investor in us. Our products are complementary. Faria has a model of bringing products into their ecosystem to provide schools with a one-stop shop. They don't have an HR suite. They want our HR suite to be part of their product offering. So we will be doing that with a partnership with them. Their addressable market is huge, 10,000 schools around the world. We see this as the Schrole community as a massive opportunity for us. Those numbers have grown significantly since we started. I think when we listed, we had about 45,000 candidates. Now we have 190,000. It's worth noting that 147,000 candidates are the ones that we market all our jobs to and market all our courses to. That's a pretty significant database and continues to grow and it's been growing a lot this year. We can see that we already have a domestic market of 40,000 users that we can market our products to as well. But we see the monetization of the Schrole community as a really interesting piece that we'll be focusing on over the next 12 months. We think already we are having people pay for our services. Teachers are paying for our services. We're paying $100 to access our full suite of services, able to apply for jobs, $100 a year. So we think we can increase that to $300 or $400. So if a teacher pays for a Connect membership and they also pay for a course, one of our short courses is $265 US. We increased that value of that teacher to well over $400. So we're looking to find ways to have our teachers engage more with us and to pay more money for our services. Where are we? So we're in more than 100 countries, and as you can see, the 419 schools is there. That was at the end of September. It has grown since then. We are very strong in Asia and the Middle East, as you can see. Opportunities for us everywhere, really. It's a matter of maintaining focus on the schools that can provide good return for us, and that we can provide a good service for them as well. We want schools to be able to feel very successful in finding good teachers through our system. So for us, it's a two-pronged approach. Make sure we have great candidates, make sure we have great schools that candidates want to go to, and make sure there's a way that everyone can be connected together. So our clients, just a little bit on our clients on the right-hand side. These are our clients through Schrole Develop, BHP, Rio Tinto, FMG. Everyone's familiar with those. We are doing a lot of work with them. We are the sole provider of a program called the OJT for Rio Tinto. We typically get booked up a year in advance with them. So that's really good. So we are on all their sites training people to be trainers. Nordaglia, Cognita, and GEMS are some of the big names in international schools. We are working with them all and provide services to all of those. Plus these schools down the bottom, the ISBs, pretty proud of having those. They're not affiliated, but they are all ISBs. International School of Bangkok, International School of Beijing, International School of of Brussels. Some of the best schools in the world, and really happy to have those. So we feel we're pretty excited about our outlook for the next 12 months. We have a expanded software suite. We're going to all our products. We will be free off from next June. We'll be free off the partnership from ISS. So while we're sharing 50% of the renewals right now, we take 100% off candidate revenue and 100% of new sales. From next year, we'll be taking 100% off renewals as well. And we're very comfortable and confident that we'll maintain and retain those schools. We have really good relationships with those schools, looking to continue with our high renewal rate and looking to expand. Our account management team are good. We're looking to expand in that and getting some high-level support. We have some external support for that. External consultants have come in and helped us to build that team. We're looking to get some full-time people to help expand that even further. Looking to expand our contract value, and also with sales growth, we've got our 3 sales drivers in our adjacent markets. It just sums up the page. I might just talk very briefly about the recent raising. I'm sure there's some questions around that. We raised 2.5 million via placement to sophisticated and institutional investors. We were lucky to have a new fund come on, Inspire Australian Equities Fund, a specialist, not a for-profit, for-purpose investor. They use EdTech as a target segment. They look for people where they can make social and environmental impact, and so that was pleasing that they wanted to come on. We are opening a share purchase plan tomorrow, I believe, and we'll be asking investors to come along with the journey, and they can put in between $1,000 and $30,000. So our use of our funds is to grow our sales and marketing team, making sure that we can address these other markets the adjacent markets we've been talking about, selling into our new markets, keeping on our strong SaaS development, our module development, and working capital. So I think I'll finish up there, and I'll take some questions.
Thanks, Rob. I think I'll kick off questions here while we're waiting for 1 or 2 from the audience. Just on that margin slide, where are you targeting, or where do you think that can get to over the medium term? So if we look out, 3 to 5 years, where would you like to, have kind of margins across the group? I appreciate, it's so many different products. They're all probably trading on different margins, but on a blended basis, where would you like to see it on a kind of a 3 to 5 year view?
Okay, well, so I'll break that down a bit. So with our software products, our SaaS products, we would like to see our SaaS products at higher than 80% margins, gross margins. Our training business has been traditionally operating at about 60% gross margins, so that's probably about where it should be. So training is maybe in 10% or 12% of our overall business. So our SaaS products will continue to grow. So so it'll be, SaaS will be high in the 80s, and other training businesses will aim for a 60% margin.
Then on the the businesses and the teacher cover and the healthcare stuff that you've got going on the West Coast over in WA, of the new salespeople that you've brought on, those 9, is there somebody dedicated to trying to get those programs up and running on the East Coast, or are those salespeople more dedicated on the international schools business?
Right now, all our sales focus is on international schools. Taking some of this extra capital, it means that we can put together a sales strategy to address the domestic market. So we expect to see some changes on that next year.
And you mentioned the Great Resignation, but I think more just people have probably stayed in countries, not just China, but globally longer than they had planned. Are you seeing any trends in terms of, are people returning to their home country? So UK nationals, you know, coming back from China, but actually going back to the UK rather than moving to an international school, you know, let's say in Singapore or Australia or, you know, somewhere else? Is it a return to home and then they're, you know, looking for jobs domestically? And what about going the other way? You know, people who had planned to, you know, do this international schools experience, but have been on hold for 2 years. I'm just trying to get a sense of, you know, the trends in the market, what's driving this, you know, huge pickup that you're seeing.
That's a really good question. So I think there will be people who will tend to say, look, I've had enough. I just want to go and see my family. I haven't seen my parents and they're elderly and I want to go home. But we won't see those on our platform, because they will just not engage with us because we don't have strong American contacts or context. So they will just resign and go home. So I think there will definitely be a group of people who are doing that. I think the whole feeling of being locked in and not better, I think we're all aware of how difficult it is to be locked in and not better see family. So I think that's a driver. For international school teachers, though, the lure and the drive of being somewhere else is probably still pretty high. If they can get home and see their family in the summer, they will still want to go overseas. We definitely are seeing more of an uptick in terms of people wanting to go to different schools. So I think the people who are used to living with COVID, they want to be in places that are less restrictive, where they can travel. So I think you're seeing people moving from Asia and wanting to go to places like Europe, even though, I mean, Europe's going through a bit of a fourth wave right now. But they feel like there's more. So Middle East is quite open, so there's more opportunities for them. Anecdotally, I spoke to a couple of friends of mine who were in Hong Kong last week, who've been in Hong Kong for 17 years, don't actually want to leave, but said they can't deal with they've been locked in for another summer and the 3 weeks quarantine, and so they're looking for Europe. So I think that's a really good anecdote for what's happening. I think teachers. So again, if you were looking to leave from the States or from Australia and everything was put on hold for a year, I don't think your desire to go overseas has changed. It's just looking to find opportunities when the opportunities exist. And so I think there's a bit of a sense that, you know, the world is opening up a bit more than it has been the last 2 years, and so people are looking to capitalize on that opportunity. And you know, all I can report on really is what I hear in the market from other people, but also what we see. And I see massive engagement with schools, and schools posting a lot more jobs than I've ever seen. You know, 20 to 30 jobs for a school is a lot, and that's hard for them to fill.
And then maybe a final question, because I appreciate we're just gone slightly over time, but I'm going to squeeze it in with, you know, you trying to get a larger share of wallet with, you know, more modules being hopefully taken up by the schools. Is in terms of pricing, are you looking at a bundle discount, or, you know, how will the terms for each of the modules work? You know, will it be the same as the original module that they're on, or will they all have their own kind of different pricing terms that, you know, is it a 12-month contract or month by month? Just trying to get a sense of how the pricing and billing is going to work once the uptake starts with these new modules.
Yeah, look, I think that's another really good question. We feel like there's an opportunity for us to rethink our pricing. Once you start delivering an HR product, you can start delivering pricing in terms of users and monthly fees. With Connect, we kind of were limited in terms of what we could offer, because we had to have a competitive price against the placement fee model. So that was one way of looking at it. When we do some early releases of Engage, it'll be a fee for early adopters, but we will look to have a user pays model, so that if you've got 10 people going through an onboarding process, you'll get charged for the person, for the number of people going through it. And once you get to a Engage, which is a staff management system, it'll be based on the number of users or the number of teachers. So we see a massive opportunity to do that, but we also see, you know, opportunities to bundle as well. So the more products you get, the more competitive the pricing is. And I think that's something that we'll be doing over the next. We have to do a bit of work on that to make sure that what we are offering is something that schools will pay for and it is competitive. But obviously, you know, I like the idea of having a monthly payment coming out and schools pay monthly, and that really also helps smooth out cash flow as well.
Yeah. Rob, we're going to leave it there. I know we've gone slightly over time. I'd like to make a special thanks for coming back in and giving us an update, and also for joining us early in the morning, your side there in WA.
Thanks, Mark. Good talking with you.